Just days after Donald Trump imposed a 100% tariff on Chinese goods, the trade war between the world's two biggest economies has exploded once again. The White House claims it's about protecting national interests, but beneath that lies a far deeper struggle for global power. Reports from Bloomberg reveal that Washington's move came after Beijing restricted exports of rare earth minerals, key materials for microchips, batteries, and defense systems. Since China controls nearly 90% of this market, the U.S. saw it as an act of economic warfare. Now, Beijing is preparing its counterstrike. According to the Financial Times, China may partially or fully sell off its massive holdings of U.S. Treasury bonds, over $770 billion worth. Even a small sell-off could send shockwaves through global markets, crashing the dollar and shaking investor confidence worldwide. Meanwhile, Reuters reports that China's central bank has quietly increased its gold reserves to record highs, now exceeding 2,300 tons. Gold prices have soared past $4,000 an ounce, a clear sign that Beijing is bracing for a financial storm and reducing its dependence on the dollar. According to the Wall Street Journal, a senior Chinese finance official said they've seen how the U.S. turns the dollar into a weapon, and now it's time to reshape the global financial system so it no longer depends on one currency. Beijing denies any plans to dump American debt, but its actions suggest otherwise. China's investments in U.S. bonds have dropped sharply over the past 2 months. At the same time, with Washington tightening sanctions on Chinese tech firms and pressuring Huawei, Beijing is openly discussing a new regional financial system within BRICS, one that uses the yuan or digital currencies for trade. Countries like Brazil, South Africa, and Saudi Arabia have already signaled support. Meanwhile, tension in Washington is rising. Analysts at the Center for Strategic and International Studies warn that any move to pressure China now could trigger a counterstrike powerful enough to shake U.S. markets. Since the first reports of a possible Chinese bond sell-off, the Dow Jones has fallen 5%, and the dollar has weakened against major currencies. Investors are fleeing to gold, and global banks are rapidly revising their forecasts. Still, Donald Trump remains defiant, unmoved by the growing financial storm. At a White House press conference, Donald Trump declared that America is ready for any scenario, insisting that China is too dependent on the U.S. market to take such risks. But according to Bloomberg Intelligence, he may be underestimating the scale of change underway in China. Over the past 5 years, Beijing has steadily reduced the use of the U.S. dollar in global trade, building its own financial tools and promoting transactions in national currencies among its allies. Inside China, state media present this shift as a historic turning point, the beginning of an era where the United States is no longer the world's sole economic center. Outlets like the Global Times declare that China is ready to strike back with its own weapon: finance. Propaganda campaigns emphasize financial independence and quote President Xi Jinping, calling for a new global balance. Behind the scenes, Beijing is quietly preparing for a potential sell-off of U.S. bonds, coordinating through a network of banks and investment funds to avoid market panic and prevent a sudden dollar collapse. At the same time, China's Ministry of Commerce is holding talks with Russia, India, and several Middle Eastern nations to build a new payment system, independent of SWIFT. According to Nikkei Asia, this project is the foundation of a BRICS financial platform expected to launch next year. In Washington, alarm bells are ringing. Senator Marco Rubio has called China's move to sell U.S. securities an economic strike. Former Federal Reserve Chairman Alan Greenspan warned on CNBC that if Beijing begins large-scale dollar sales, the U.S. economy could enter a shock phase with inflation spiraling out of control. Global media have picked up the wave of concern. European outlets speak of a coming financial tsunami, while economists at Deutsche Bank warn that even a 5% Chinese sell-off could raise U.S. bond yields by 1.5 points, triggering massive capital flight from American markets. Yet, despite the rising panic, experts warn that the situation isn't entirely one-sided. China knows that a collapse of the U.S. economy would also hit its own interests hard. The American market still accounts for more than 15% of China's exports, and a sudden dollar crash could inflict massive losses. That's why Beijing is moving cautiously, not aiming for a sudden collapse, but for a gradual shift in power. A slow-moving shock designed to erode American dominance over time, not overnight. Meanwhile, gold prices keep climbing. According to Kitco News, central banks are buying record amounts of precious metals, led by China, Turkey, and Saudi Arabia, all key players within BRICS. Analysts call this the dawn of a golden era, where trust in paper currencies is fading fast. Inside Washington, concern is mounting. Treasury insiders reveal that the White House is drafting emergency plans to shield the financial system, including capital controls, restrictions on foreign investments, and even temporary suspension of stock trading if panic erupts. But experts warn, if China truly decides to dump U.S. debt, stopping it may be impossible. All of this unfolds as tensions in the Asia-Pacific grow hotter. China is expanding its military presence near Taiwan, while the U.S. responds with new arms shipments to the island. The economic battle is merging with a geopolitical one, and many now see this as the dawn of a new kind of Cold War, fought not with missiles but with money. Economists say this showdown goes far beyond trade disputes. It's a fight for control over the future of global finance, energy, and technology. And while Trump insists that America has never been stronger, the reality tells a different story. For the first time in decades, the United States finds itself playing by rules it didn't create. Inside the country, anxiety grows. Markets are shaky. Corporations are freezing investments, and ordinary Americans are moving their savings into gold and crypto, bracing for whatever comes next. Social media is now flooded with warnings from economists predicting the dollar's collapse. Some outlets even compare today's crisis to 2008, a financial sequel to the Great Recession. Through it all, China remains silent. But that silence speaks louder than any statement. With every passing day, the tension grows. Markets are trembling, and the shadow of a coming storm looms over the global economy. And if Beijing truly decides to unload America's debt, that moment will mark history, the day the era of the dollar's unquestioned dominance came to an end. A day already being whispered about as a black day for America.